Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein with your agriculture update, and this is for Thursday, and we are now at the 12th of April, 2018, time 2:15 p.m. Central Daylight Time, 72 degrees in Chicago, downtown, right outside the Board of Trade today. We're going to drop back into the 30s, of course, but we're getting our first taste. Everybody out there is going crazy. When you look at the ag markets today, you can see corn up 1 3/4. Wheat's giving some up. Wheat's entering that time of year where normally on a seasonal basis you drop. We know that we've had an unusual hard red winter, if you will, drought conditions, and that's keeping that bid. And speaking of the drought, nothing has changed in Argentina. This market keeps getting a nice bid in the market. Remember, if you get China and they want to not buy U.S. soybeans, and they're making plans, they're talking more rapeseed and oil seeds in different parts. I read that today. It'll be in my nightly update tonight talking about that. Fine. It won't matter. What happens if they don't buy U.S., they'll buy South American. Whoever's left that can't get it from South America, because the price is going to move there, they'll come back to America. We'll trading partners. President's also coming out and saying he is going to protect American farmers. It's all over the wires. They're looking at all kinds of plans as a contingency. He again said today, and the first time he said that at least America and the U.S. are talking, but he thinks it's going to be a very hard road. China does not want to give up their plans for 2025. They don't want to give up their technology. They're not going to make things easy for America. So this president, he's looking on, and that's one of the reasons that all of a sudden the Pacific Pact, he's ordered in Larry Kudlow, and they're taking a look. Maybe they should rejoin that, a way to get around China. Keep your eye open on that, especially in the ag market. It's going to get very interesting. Stock market today up. And the reason is you wake up every day, you think you're going to strike Syria, and then you're scared if something's going to happen with Russia. And all of a sudden the president has fully backtracked. Eventually we'll hit, we don't know when, we're not going to say. That's what he should have done from the very beginning. Gold from yesterday, $30 lower off of that, the dollar back up, and you're getting a host of metals just back and forth. I think copper's getting back to reality and looking beyond the Syrian situation and saying, hold on, what if there is a trade war? What does it mean for me? When you come to the weekly area chart of closes, and all this chart is closing prices, not the highs and lows, just plotting the closes. First thing I look at is where's the market in relation to the 18-week moving average of closes. I need a reference point so I can figure out is the market acting bullish or bearish. It's acting bullish. It has a bias because it's over that. That's my interpretation. I then look to see is the market got a pattern of any type where I can say even on a closing basis I got higher lows and higher highs. I can call that an uptrend, and that's what I'm seeing. When you come to the daily area chart, all it is it's not going to be on the weekly basis here. It's going to be on the daily basis. Same thing. I look at the 18-week average of closes and look at this thrust. You've now gone 45 cents up just since you made this recent low at the beginning of April. Remember, we're only the 12th in that market. Again, I'm going to say that this is just an awful lot to do about South America. On a daily bar chart, you can see how the action looks. And when I put on a study called Swing Lines, you get to see that the market's got a pattern of higher lows. Do you see these apex lows? And certainly higher highs. We don't know where this is going to end. What would break that pattern? Well, what would break that pattern is taking out 1047 1/4. It would give you in some manner a lower low. You could even, if you don't get up here and take out 1064, suddenly end up with lower highs and lower lows. But that hasn't occurred. Therefore, until it occurs, the market's still in its uptrend. Where is support? In order to reach one of the support levels, I'll call it the line in the sand, the 18-day average of closes. And the reason I call it the line in the sand is because that is the number that I determine. Is the market looking at other indicators because price is over that number for buys, or if the market's under it, am I looking at my other indicators for sells? So it is the line. And in order to get to that line, I have to break the uptrend. So as nice as it is a support zone, the problem is you would break a bullish chart pattern. What about resistance? Well, one of the elements that I use, and I use two, I use what's called window envelopes is one resistance point, but the bigger one is the Bollinger Bands because it's so popular. And when you get indicators that are very popular, people watch them. How many times do you hear death crosses? You'll hear that term. If you watch financial TV, you'll see written reports about it if you read the news wires. I'm not saying you have one anywhere here. I'm just saying that's what you read about. Well, Bollinger Bands are another popular study. The concept here is the market looks back and it projects forward. And what it does is it gives you an idea of resistance on the upside, support on the down. 95% of the time, the market's going to trade within these bands. How pros often use it is the first challenge of the band. If the market falls, they're looking to get out of potential shorts they might have on, or shorts they actually have on, opposite on longs. Now, you get a market that goes up and over the band, pulls back under it, back over it. Well, 5% of the time the market can stay over it. So getting back under it is fine, or getting to it. Now, if we look at yesterday's close, the market finished at 1047 3/4. The Bollinger Band was at 1054.5, so you were under it. Today the market's closed 1060 3/4. You're back over 1057.5. So you've got about a 4% chance, the way that I calculate it, to get each day one of those percentage points that it's over it, of staying over that band. In other words, a 96% chance the market will try to get back within it. But in order to get trends going, what often happens is markets develop within the band sideways action and break out of that one way or the other. I don't think that's enough sideways action to say that. I think this market's more of a weather concern market. I then look at momentum. And there's many things you can use for momentum. I'm going to start doing, probably next week, a whole series for you on different indicators that you'll be able to get on our website. And they're going to be videos. And I'll teach how I, at least, understand them and how I employ them. And there'll be a lot of them over time. And what this is doing is you are taking this market momentum up, but you've reached an overbought area. So I have a market that's in an uptrend. It is overbought. The bias is up, and it's over one of the targets. That's how I look at it. When I look at the meal market, the meal's in an uptrend. You've got higher lows, higher highs. It's pulling back. What did I say about that line in the sand? Often the 18-day average acts as it. So as long as this doesn't get under 375.50, the trend is still up. However, and I'm going to say it again, you're overbought. Any reading in stochastics, in my interpretation, over 70 is overbought. You are overbought in an uptrend that has hit its upside target, and it has backed off already since hitting that about $1,000 a contract, $10. In the soybean oil, the battleground has been and continues to be the 18-day average of closes. Each time the market tries to break out to the upside, gets to that Bollinger Band and gets slammed down. It gets to the lower band, it goes back to the 18-day average. You can see the pattern there. Right now we have a market that is trendless. It is oversold. The bias is down, but it can be a surprise, because if this market gets up and over right here, yesterday's highs, which were 31.92, you could all of a sudden, if this low isn't taken out, be a pattern of higher lows, higher highs, and maybe you're going to make a run again for that upper Bollinger Band. We'll see. In the May corn, I pointed out yesterday that you have exact highs at 392.5 and exact lows at 372. Double tops, double bottoms, it's called. You are overbought. The trend is up. Support is back at 382.10. If you were to buy there, what's the risk to the chart pattern? Not to get under, at least at this point, 372. What's the upside target if the trend stays intact? Potentially 395.5, and the neutral point or support levels around 382. In the wheat market, we're suddenly getting a market that's reversing back. Now, when you got up to this Bollinger Band, you had 2 days over it, and this was back on Tuesday. Today is only Thursday. And I explained in that tape that when you get consecutive days over, my rule of thumb, I wish I could tell you it's a hard, fast rule, but it's one that I pay close attention to. Each consecutive day over a Bollinger Band takes away that, out of that 5% chance of it closing over it, one of those percentage points. The logical question, of course, is what if you get to the 6th day? Okay, I've seen 7. I've seen as high as 9, actually. Doesn't matter. You play the norms. You're not trying to get bearish anyways. You're over the 18-day average. The trend is up if you're a trend follower. What you're looking for are reasons not to hang around maybe. And what this did is it gave you a 3% chance of staying over it. You fell back yesterday. You're extending that break now. And if you watch seasonal studies, and seasonal studies are no more than a tool. Got it? That's all. There's no magic to them. There's reasons that markets go up and down often. It has to do with the fundamentals. And you start looking back at seasonals. Well, one of the things that often happens is wheat weakens at this time of the year. Does it have to? No. Is there anything on this chart that says it's bearish? Absolutely not. But you are overbought. You've hit your upside target, and support's way back here at 462, almost $1,000 or 19 cents lower. In the sugar market, you can see the number that keeps supporting the market. Look at the lower Bollinger Band. That is not a buy signal. That is a signal where I think the shorts are covering. Now, this can all convert, and this market can take this action and plunge potentially if you embed. What is embedding? If you look at the numbers that make up the slow stochastic, they're called a K and a D. The K is the the red. The blue is the D. They whipsaw back and forth over each other. It's the identical formula. One uses 3 days, the other 5. So one's a shorter term. Think of it average crossing over the other. Think of it in those terms. Well, if both numbers stay under 20 for several days in a row, which they're not, the market is said to convert, at least I've labeled it that. It's said to convert from being oversold to locking in a downtrend because the market would be under the 20 level. It's not there. It's an oversold market in a downtrend. Resistance is back at 1242. That number should drop tomorrow. And what you don't want to take out is that 1242, the last swing line high. In the coffee market, battleground is what number? Look at this 18-day average of closes. The bear play ended over here, right here. The pattern started making higher lows and higher highs. It fell back, broke that yesterday by making a lower low, and today it's right back at the 18-day average. As the market's doing this, it's taking these black lines and shifting them sideways. If they shift and stay that way long enough, it's like a spring in a pipe. And it waits to create a trend. That's what I'm looking to see. What's the next trend? Similar action is in the cocoa. You can see this much clearer. Look at how sideways it's going. You have a lower low, higher high pattern. No follow through so far to the upside. Keeps pulling back to that 18-day average. The market that went bullish on you is cotton. It's got the pattern of higher lows, higher highs. Yesterday it rallied up, challenged that upper Bollinger Band. Didn't give up much ground today. It is overbought and supports way back at the 18-day average of closes. Then we get to the meat markets, and one of the things I've been telling people is momentum turned up back here. This was an embedded reading. Often, what I've discovered in nearly my I'm almost 50 years in this business. What I've discovered, and I was in law school as a runner at one point, and on the floor we'd bring in the orders. What I've learned is you learn these indicators, and they start giving you ideas. Well, what I like about momentum is it often, not always, but often leads price. And when I have an embedded reading and it gives itself up like it did here, it often leads to the idea that price and the 18-day average are going to come together. It does not mean price has to zoom up the next day to do it, but it does mean that you've lost the downside momentum. Can it change? Of course, but I'm giving you the word often. And you could see now, let's see, market backs off. I've got a signal that says price and this 18-day average come together. So I'm not looking at the market in a bearish tone any longer. I'm looking, can the market rally? And let's see where we're at. There we go. Look at today. Today's high, 104.47.5.
The 18-day average, 104.45. So now I have a market that is still in the bear camp because it didn't take out 104.60. It's under the 18-day average, but you're at a crux point. If this market takes out 104.60, the trend is completely over because you have a lower low and a higher high. That's how I'd look at it. In the feeder cattle, you lost it back here too, and it not only went to that 18, it's soaring the other way, but it's not trending. It's got a lower low and a higher high. In the hogs, you've been trending. You've got the higher lows, the higher highs. If the market reaches a bit more, maybe it can get to the 78.27 level, the upper Bollinger Band. You're very overbought, so I think the pros realize that you may not be able to get quite there, and they'll adjust accordingly. You think? One of the things that I like is what I can present from different exchanges, some of the different services I use. This is called Modern Traders Profitable Trading Strategies in Any Market. And they're going to show you how to price trade, the basics, price action trading, very important, how to trade. You better learn price action. Trend trading, the flat base patterns, you even know what it is? Forecasting with Caliber and Affinity, the American Crowfoot. I'll present, as you keep watching these videos, many different things, and I'll be adding to them, especially as this year goes on, because now that the volatility's back, traders have come back, and we want to really help everybody out there learn more. I'm not saying this stuff is the stuff that you walk on, but I'm saying it's worth learning. So these are what the articles look like. They'll give you examples of everything. And, of course, it goes hand in hand with a subscription, if you'd like it, to Modern Trader Magazine, which I think is one of the best out there, if not the best for traders. How do you get it? Simple. Call my staff. Go to our website. You'll see a carousel of free offers. Click up here if you're watching me on YouTube, or under us on some websites it says click here for, and they'll be under our video. Click here for Ira's free offers. I'm Ira Epstein. You have a good day.